Now, today I am going to talk about dissolution of partnership form. First of all, I would like to tell you one thing very clearly, that there is a difference between dissolution of partnership and dissolution of partnership form. Now, how will you differentiate dissolution of partnership and dissolution of partnership form? It looks like that dissolution of partners and dissolution of partnership form both are the same thing, but both are not the same. Now I'll give you one example of dissolution of partnership means what. Suppose if there are 4 persons, Ram, Lakshman, Bharat, Shatrughan, 4 are running their own business, and suppose if any disputes arises, then they are going to suppose Mr. Ram if exit from the business, then Lakshman, Bharat and Shatrughan are going to continue their business activity. So there is a dissolution of partnership, not dissolution of partnership form. But if we have 4 partners, Ram, Lakshman, Bharat and Shatrughan, and they have decided to disclose the business activity for a permanent basis, then if they are not going to run their business activity, then we can say that there is a dissolution of partnership form. Now, at the time of dissolution of partnership form, we have to look here that how many ledgers account we need to prepare. We have to prepare 4 ledger account. First one is a realization account, second one is a partners capital account, and third one is a cash or bank account, and last one is our partners loan account. Let me tell you one thing very clearly, that we have to first prepare realization account, second partners capital account, then we have to prepare cash or bank account, and in some cases there is a possibility that we might be given partners loan in our balance sheet, then we will have to prepare partners loan account. Now, how accounts would be disclosed, how we have to close our realization account, partners capital account, cash or bank account or partners loan account. For that purpose, I am going to give you some short tips. Like, first of all, we have to close our partners loan account. Partners loan account will be closed, and this account, whatever balancing figure we get, whether we get balancing figure on the debit side or on the credit side, it will be transferred to our cash or bank balance. So, partners loan account is always going to be transferred to cash or bank account. There is a possibility that in some cases we might have to transfer partners loan account in our realization account. But mostly partners loan account will be transferred to cash or bank account. Now after closing partners loan account, we need to close our realization account. After closing realization account, if we get balancing figure on the debit side, then we get profit, and if we get balancing figure on the credit side, then we get loss. Either we get profit or loss, it's going to be transferred to our partners capital account. Suppose if we have got balancing figure on the debit side of realization account, then it's going to be transferred to the credit side of partners capital account. And in some cases, if we get balancing figure on the credit side, means if loss arises, then loss is going to be transferred to the debit side of our partners capital account. So first we have to close partners loan account, then we have to close the realization account, and third thing, we need to close partners capital account. Each and every partners account will be closed individually, and whatever balancing figure we get, that's going to be transferred to our cash or bank account, and ultimately your cash or bank account will be tallied if there is a full settlement. So we have to first prepare realization account, second one is our partners capital account, then we have cash or bank account, and last one partners loan account. Partners loan account balancing figure will be transferred to realization account in some cases, but mostly in cash or bank account. and second we have to close realization account. It's going to be transferred to partners capital account, and partners capital account is going to be transferred to cash or bank account. Now I am going to give you some short tip, because your examination are going to arise whether you might be appearing in the month of February or April. That's why I am giving you short example that mostly in dissolution of partnership form, we will be given a balance sheet. And we are aware that we have been given liabilities in our balance sheet, we have been given reserve and surplus. Third one is the partners capital, partners loans, assets and fictitious assets. Now, we are already aware with the liabilities represent credit side. So liabilities are going to be transferred to the credit side of realization account. We are aware that liabilities represent credit side and assets represent debit side. So liabilities is going to be transferred to the credit side of realization account. Am I very clear? Now, we must be given reserve and surplus in our balance sheet. Then, reserve and surplus belongs to the partner. So it will be transferred to the partner's capital account, and reserve is recorded on the liabilities side and liabilities represent credit side. So ultimately it's going to be transferred to the credit side of partner's capital account. So remember one thing, credit will be transferred to the credit side. Like here in liabilities represent credit side, so we have transferred it to the realization account. And reserve is also represent credit side, it has also transferred to the credit side of partner's capital account. Now third one we have capital account, and we are already aware with the fact that capital is always given on the liabilities side, and capital is given on the liability side means the capital represent credit side. So capital will be transferred to the partner's capital account, but there is a possibility that we might be given capital account or current account on the debit side. So if capital account or current account is given on the debit side means asset side, then it will be transferred to the debit side of partner's capital account. Mostly capital account will be given on the liability side, so it will be transferred to the credit side. And if capital is given or current account is given on the debit side, then it will be transferred to the partner's capital account but in debit column. Now next one we have partner's loan account. In some cases in our balance sheet we might be given partner's loan account. Then partner's loan account is given on the liability side and liabilities represent credit side. So it's going to be transferred to the credit side of partner's loan account. Am I very clear? Now next one we have asset. Already we are aware with the fact that assets represent debit side. Like here you can see that liabilities represent credit side, so it has been transferred to the credit side of realization account. In the same way, we have assets, and assets represent debit side, so it will be transferred to the debit side of realization account. Now next and last thing we have fictitious asset, and fictitious asset is also recorded on the debit side, but it's a fictitious assets, like then it's going to be recorded in debit side of our partner's capital account. Now after completing this table, now I am going to give you some journal entries, and I am going to brief you about some journal entry. If assets realized. If assets realized means what? If we have sold our asset, then we are going to receive some money, then cash or bank account is debited and to realization account. Realization account means what? Realization account is our nominal account. Means debit all expenses, losses, credit all income, gains and profit. It's same here. If we sold our asset, then we are going to receive some money, then cash or bank account is debited and realization account is credited. Then now next entry we have if assets taken over by the partner. If assets taken over by the partner. In some cases there is a possibility that in our problem assets will be taken over by the partner. then we are not going to receive money. Partners capital account is our personal account. They are the receiver of our assets. That's why partners capital account debit to realization account. So here also we are getting profit or income. Now third entry we are going to discuss about third entry. We have if liability is realized. Liability is realized means what? If liability is realized means we are making the payment of liabilities. Then it is an expenditure for the partnership firm. That's why realization account will be debited and cash or check will be going outside of the organization. So realization account debit to cash or bank account. Now fourth entry we have if liability is taken over by a partner. Then means what? If something liabilities is taken over by the partner, then realization account debit to partners capital account entry we have to pass. Now fifth entry we have, suppose in some cases if any assets is not realized. If any assets is not realized means we have not sold any asset and we have not received any money from that particular asset, then we are going to sell it in the market and we are going to receive money. So cash or bank account debit to realization account. If any asset is not realized, the same entry we have to pass. Like here we have past entry like if assets realized, whether realized or not realized. Entry will be the same, cash or bank account debit to realization account. Now there is a possibility that in our problem there will be some liabilities which is neither taken by the partner nor paid. Then we have to pass entry like realization account debit to cash or bank account. Now after doing this one, we have to prepare ledger entry like realization